guys, Bill here, and in this video we're going to talk about utilizing daily gap levels in our trading. A gap is something that happens when price action, either after hours or in pre-market, makes a big move and the stock opens notably higher or lower than the previous day's close. I have CCL pulled up here, and you'll notice that on my charts I use dash green lines to signify gaps. So we have one gap here. This is from earnings, and a lot of times gaps will be created because of earnings reports or other big data releases like CPI and things like that. And how we want to use them is we mark levels where the gaps occurred, all right? So I use the bodies of the candles, like the close and the open in this instance, of this gap down. And these levels will be respected really well. Gaps like to get filled, so it can kind of give you an idea of some sentiment of a stock. If it's starting to reapproach a gap that it hasn't filled yet, it can help you develop a thesis. You can use the levels as triggers for calls and puts, profit targets on trades, all sorts of great things, just like, you know, your standard support and resistance levels, but, you know, just different ones to mark that might not be there normally. And they're easy to spot on the daily chart when you're doing your prep and all that. So let's check out this gap here. We gap down, flush from earnings, and CCL starts to find a little bit of support here and starts to move its way back up. And in 2 days here, it starts to fill the gap. So we close over the bottom level, and then look, we wick right off the top. And this is really common. So these gap levels, they can be both support and resistance. So price had a fairly easy time getting into the gap. Sometimes you'll be met with some resistance on initial tries to fill the gap, and you'll reject a couple times before it happens. But often, once the gap is filled, you're going to get a rejection. So that it basically fills it to the cent, right? And then it's, you know, they're out of steam there. And the entry of the gap level starts to become support. Bounces here, comes back down, dips a little below, but we're back in the gap again, rejects the top of the gap, bounces off the bottom. Look at all this like consolidation now in the gap. So these levels are very strong. And then once we finally get a close out of the gap, look at the move that CCL makes. Just really impressive stuff. There's another gap down here actually on the rebound. Before we filled this top gap, we created another gap up. And now look at this gap. This hasn't been filled yet. We got local highs and came all the way down, and we just wicked and wicked and wicked and would not fill this gap. And so this is what I was talking about earlier when we came up through this gap. It was kind of a smooth move and then rejected once it was filled. But this time we're trying to fill the gap and we just can't get it. This is turning into big support here on CCL, and then a huge move back up. So these gap levels are just another thing you can add to your chart. And oftentimes, you know, they end up being in places maybe you didn't have levels. I have this fib drawn, and I wouldn't have really, you know, I don't know if I would have had levels here, but because of the gap and the gap that created it, it created new support and resistance on my chart that I can trust. Let's talk about another example here. Let's look at AMC. All right, so on AMC, turn on my extended hours so I can. I don't know why it won't let me use extended hours, not included in this interval. Can't use extended hours on, oh, daily? Okay, whatever. So let's see. We have a gap up, or there's two gaps on this chart, but I wasn't really paying much attention to this one. I'm paying attention to this gap down here. Basically AMC, the memes got really hot on the 11th. So, BBBY, had like a 60% day, but it was already, moving really strongly in pre-market. So it got my attention on some of the meme stocks, and I hadn't traded AMC in a while. So I didn't have these levels here, but I pulled up AMC, and that was the first thing I noticed was this gap from this day. So I made that a priority, when I was trading AMC that day to be a profit target. So this was on the 11th. Let's see. Yeah. All right. So, I was trading AMC this day. I think I got in around like here somewhere. I can't really remember. But I remember, saying, you know, my target is 491 because that's the start of the gap. And if you look, we moved up, we got into the gap a little bit and then hard reject. So I was pretty much all out on my trade once we started to approach this gap level because I was anticipating a big rejection. We got it. And you can see on the 5-minute chart, it closes right at the gap and then opens right at the gap and flushes. And then these levels are respected for the next few days. Okay. So, we couldn't fill the gap this day. But we started getting up there in after hours that session and we broke above it earlier in this day and we were kind of trading in this gap the following day. And then look at the day after that, another gap fill and a big reject off the top and then come down and holding the bottom and then moving back up into close. So, these levels can stay strong for a while. Even once the gap's filled, they can be reliable for a while. So just keep them up on your charts. And, and as long as they're being respected, you can keep using them. But the longer they're there for, they do tend to get weak and become levels that aren't as important. But you're just going to have to, kind of keep your eyes on them and see what works for you. And then as a bonus, let's look at Amazon because this is a stock that I'm going to be watching into the start of the week on Tuesday because Monday is a holiday. There's a big notable gap coming up on Amazon. So I'm kind of excited to see where we can go with this. Amazon put in a bullish engulfing candle here on Friday, very bullish. And we have, some room till we get to the gap still. And we've tested this gap one time. Here's where it was created, a gap down. And the next 2 days we tried to get over it and couldn't, and we flushed. And then we came back up and we tested the gap again and failed. So this is another example of how these gaps, they want to be filled, but they don't always do it right away. So we've had a couple tests and fails of this gap level, but every time a level gets tested more and more, it's more likely to give in. So I'm going to be looking to trade Amazon first, making some money just on the way up to the gap, and then trying to play, and let's see if we can actually get into the gap. There's another big level right by the gap as well, which is the COVID 786 fib. So this is going to be a big spot on the chart, but I am anticipating a run up and test of that at least. So this is how I use the gaps in my day-to-day trading. Hopefully that gives you guys some ideas and things you can incorporate on your own. If you have any questions about it, let me know. Give me a follow on Twitter if you don't follow. Make sure you subscribe to the channel and like. And if you have any questions, reach out to me and I'll help you guys out. All right. Thank you.